Hey there, welcome to the show. It's Les Sulgrove. This is Simply Des Moines market values, market updates, whatever you want to call it. It's week 10, 2023. We are hopefully past the snowstorms here. This past weekend, we had kind of a surprising snow event in Des Moines. We were kind of on the edge, and recently we've been missed because they've said it's going to go up or up above us or down. We're going to miss us. Apparently, we got a little bit more this time than we had planned on. It was a thick, heavy, wet snow, and I think it kind of affected a little bit of the real estate market this past weekend as well, especially maybe open houses. We'll talk about that today on Simply Des Moines Market Values for the week 10 in 2023. So to start off here, let's look at the hot sheet. The hot sheet is showing in that lower right-hand corner here. I like to show this. We're starting to make some gains here on our year-to-date close. The closed sales are starting to pick up a little bit. The number of homes that have gone under contract since January are now starting to come into play and close. So we're starting to pick up the pace on closed sales. That's good. Our inventory is still low, but it's growing. It's above where we were last year. Last year we were at 1689. This year we're at almost 2500. It's still low compared to where we really should be, but it's on the right path. So we'll keep watching this each week. I'll point out things on this graphic that are kind of important to focus on each week, but. In any case, it's here. This is also produced every single day at DesMoinesMarketValues.com. I update it near the end of the day, and you'll see the daily update of that hot sheet. So I hope you are getting some value out of that. So it's been a long time since I've talked about the showing time activity report. This is a report by Showing Time, which is part of the Des Moines Multiple Listing Service. And back when COVID hit, they started producing this graphic showing the impact of COVID-19 on real estate showings. And yes, COVID-19's kind of, we still have COVID-19 in the marketplace and in the country, but it's not nearly as affecting everyone as it was. We do seem to have had a little bit of a surge here in the last few weeks. But what's interesting is just how this market is reacting. And the graphic you see in front of you there, there's basically it goes back to 2020. It goes back 3 years prior. And 2020, that's the light gray line in the back. In fact, let me see if I can highlight it. This one right here. This was the year that COVID really hit, and it shows you the showing activity even during that year where activity was. But what I want to point out is here, 2023, our showing pace, this is an indication of the number of showings scheduled in a showing service we have in the Des Moines metro area. And the showings are actually down. In fact, for the week of March 11th, compared to 2020, we're down, almost, -4% this year. So add that to the plus 68. It's quite a huge change from the previous year. However, just last year, even last year at this time was more active than we currently are. And keep in mind, last year about this time, mortgage interest rates were just, in full swing of rising, and there was a lot of concern and questions as to whether that was going to continue. And I think there was some activity that happened last year in the first quarter to the first 2 quarters that a lot of buyers were out there buying, thinking that maybe they ought to get in before the rates go up. Well, obviously rates did continue to go up. We'll talk about rates today as well here, but this is just a good graphic showing you kind of the activity, and this kind of matches some of our inventory and our activity levels here. Speaking of inventory, this is the number of homes for sale on a weekly basis, and it's looking compared to 2022 in the dark black line and 2021 in the light gray line. That just gives you an idea for trending where we're at. What I do like about this week's numbers are that we've started to see this little bit of an increase here. It's no longer going down. We started the year in inventory as it typically does the first of the year, starts to drop, but we're officially now kind of leveling off, and I would expect in the next couple of weeks for this inventory to start to rise. How much of this was affected by storms this winter? Well, it's very possible that at least in this past week, maybe we had some homes that weren't listed on Thursday and Friday just because of this impending storm we had, and it was a doozy. So Looking at the median list price. So not only are we looking at the number of homes for sale, what are they pricing at? And we're pretty close to 2022. We're just a little bit above pricing on 2022 overall. We did see right here, you'll see there's a little bit of a drop this past week in median list price, which could indicate that some of our existing homes are coming on the market. This number is based on all homes for sale. But geez, even from 2 years ago, 2021, our pricing is still fairly high versus just pre-COVID era there. So we are still holding pretty tight on the high pricing as far as the list price. Now, what does that look like when you look at it compared to the median sale price? So again, this green line up here is that graphic we just looked at. This is the price of homes that are currently for sale. But then you come down here. This is the pricing of the homes that are currently closing or that have sold. And that's right around that $250,000 price point. It doesn't mean that homes are listing for $360,000 or $370,000 and selling for $250,000. That's not what this graphic means at all. It just simply means that of the homes that are for sale, this is the list price of those, but the price of the homes overall that are selling are much lower. A large percentage of this on the green median list price is affected by new construction, and I would say that we're probably selling right now, as typical, we're probably selling more existing homes, resale properties right now. And so that's probably why that's a little bit lower. I would expect that to probably start to rise as the spring market comes on and summer comes on. We'll watch that graphic. As far as sale pendings, this is again kind of an indication like that showing time graphic that shows that because number of showings are down, obviously also down are the number of homes in the sale pending process. This is actually the number of homes that are waiting to close, just over 2,000 homes right now, from compared to 2022 and 2021, where we were above 3,000 homes for sale. So we're down by about 1,000 homes in the closing process from a year ago. The big difference was that 2021 went on to be our record year, where we hit about 4,600 homes in the sale pending process, and 2022, most likely obviously driven by the high mortgage interest rates that were coming into play, peaked at just under 3,500 homes. And then as we get through the last half of the year, this is the typical process. We ramp up in the spring and then slowly tail off in the fall here. But would love to see this number start to increase as we move into the spring market. This is probably one of the most important numbers we'll ever watch, because it gives you an idea of the current pace of market activity and where future sale counts are going to come from. One of the things that is a byproduct of a slower market, and we're seeing this a lot this year, is price reductions. And I pulled this particular graphic this week just because it had a pretty good spike there. 230, 232, I think it was the actual number of price reductions we had this past week, where prior to that we were under 200. This is by far the busiest week for homeowners reevaluating, home sellers reevaluating their pricing and making adjustments. A lot of this is probably due to the fact that we're coming into the spring market next week, and they know that competition all of a sudden is going to get really, really tight. And so it's smart on their part to take a look at pricing and condition and see what things they can do to make their home sell before we get into the crazy season or the silly season. Open house counts, a couple of years ago, in fact, the last 2 years, our open house counts were down by about 50% or more. We were under 750 open houses this weekend total. I would expect that a lot, again, the weather was probably some part of that process, but as we move into the summer markets, the last couple of years, we only had a couple of weeks there. You can see this one week right here where it kind of spiked. But as the year goes on, open houses tend to become more popular and maybe more needed as you're trying to get homes sold before the end of the year. Whereas of this year in 2023, our open house traffic is already, or our open house counts are already well up. I can't vouch for the traffic, but I can tell you that the open house numbers are up considerably from a year ago. So to finish up the show this week, there is big news coming tomorrow. What day is the 13th? Monday, March 13th. My good friend Steve Schraderbacher, mortgage lender here in the local market, has been sending me this information all week, and in fact sent me these two today. Now, first of all, I want you to know I'm staying in my lane. I am not an economist. All I know is that when the Fed meets, typically they're talking about mortgage interest rates, and not mortgage interest rates, the borrowing rates, the discount rates charged by the Federal Reserve banks, which do, contrary to what people say, do ultimately affect mortgage interest rates. It's not a direct effect, but it does affect them. The Board of Governors are meeting tomorrow, March 13th, to discuss discount rates to be charged by the Federal Reserve banks. Now, does this mean that they're talking about maybe continuing to raise rates higher? I know there's been some talk about changing the basis points of raising the prime lending rate to a full percent. And then I've also read articles where they're talking about maybe reducing it to, maybe help this economy move away from a potential recession. So again, this is about as much as I know about the economy on this side, or at least that I feel comfortable talking about. So just watch the news tomorrow. Watch the trade journal information. The information you get in your inboxes about the real estate industry. And if you're the consumers watching this, start watching the news, but take the actual news a little bit with a grain of salt. They like to talk about the negatives, not necessarily maybe what's really happening. If you do have any questions, reach out to your favorite mortgage lenders. They're also going to be watching this closely tomorrow. So thank you, Steve, for bringing that to my attention. To just give you an idea here, two last slides I'll show you is the mortgage interest rates. Again, this is not the Fed, but these are mortgage interest rates from Freddie Mac that come out every week on Thursdays. The last Thursday's prime average mortgage rate for the nation was 6.73%. Yes, locally you can probably get rates lower than that, but this is the prime average across the nation here. Compare that to a year ago at 3.85%. That's a pretty good split, change there from where we were last year. That's why we probably saw some pretty good business into the first quarter, because you can see here that the interest rates really didn't rise dramatically last year until we got to the second quarter, and then of course into the third, close to the fourth quarter here is when they really rose up again. This 6.73%, what does that mean for payment? This is the old graphic that I continue to use. I assume a home buyer out there with a $1,200 monthly principal and interest payment. This does not include taxes and insurance. This is just the mortgage payment, principal and interest payment. If their payment was $1,200 and it was a 30-year fixed rate mortgage at this 6.73% interest rate, that means that this $1,200 would fund about $185,400 mortgage. That's quite a drop, as you can see that as rates were going up and down in the first 2 or 3, 4 or 5 weeks of this year. The buying power was well over 197, and now it's down to about 185. So keep this in mind as you're watching the real estate market. If you're a buyer out there considering buying, timing is going to be everything, and talk with your mortgage lender about the potential to lock your mortgage interest rate, and maybe when the best time to do that would be. I would think that right now it might be a little, I'm not even going to go there. I'm not even going to give any advice on whether you should lock or not. Speak with the people that you know there. So with that, that's the end of the show this week. I appreciate your attendance, your comments, people finding value out of this. Please do hit that thumbs up button on the YouTube channel and subscribe to the channel. Next week's show will be out on Monday, probably Monday evening instead of Sunday night. I'm traveling next weekend, and I will be unavailable to record this Sunday night, and so I'll probably record it Monday night unless I can figure something else out. But in the meantime, thank you for joining me. Be sure and go to DesMoinesMarketValues.com, and we'll see you all again next week on Monday, if not sooner.